Well, it's a lovely Tuesday, everybody. I hope you're doing well. And we're going to get right into taking a look at the markets today. This is Futures Brizio. It is Tuesday, April 21st. It's 10:46 a.m. New York City time. And make sure you smash that like button, subscribe to the channel. Any questions, comments, leave them down below. Um, and we'll jump right in. So, first thing first, wanted to again talk about the currency strength indicator. And I continue to play around with this and try different instances of it and etc. Different look back periods, using just one instance of it, using two, using an overlaid one, which I was showing you like maybe a week ago. So, this is my latest iteration you see on the screen, which basically is up here. We've got a 35 period look back, and I know if you've been watching the video, it's going to be like 35 periods. You said that's too long. Well, it is too long if you're looking for more frequent trades, but it's not too long for identifying kind of longer term shifts in the market. So just well, this is not the right market. Let's go. We got to go to Forex and we got to go to the daily chart. Let's pick something that trends a little bit. Let's go to Euro Aussie, something like this. Okay, so if we look at Euro Aussie, if you look right where my pointer is right now, this is the 35 period one here. This is the 10 period one, which is the one I was using most often. Okay, so that's all it is. I don't have them. I decided to leave them separate from in the screen instead of having them overlaid on top of each other, which is what I showed you about a week ago. Although it takes up a lot of room on the screen, it kind of squishes the chart down a little bit. Um, I don't know. I still kind of prefer it this way, but it doesn't really matter. That's more of a preference thing. But anyways, if you look right here, you can see this crossover that happened. This was back in December of last year, late December. You can see this bearish crossover right here on this candle, basically. And you can see it called this bottom. Now you can see you also got the same signal basically at the same time on the 10 period look back. All right. And then if you look across here, this entire time, there has been no other crossover suggesting a reversal. The two lines squeezed together right here because this was a pullback. You can see the euro rallying here a little bit, and it pulled back and then started diverting away again. And you can see we have since had another down leg. So this actually did kind of call out the corrective move on where it squeezes together like this, and then it continues to divert and it keeps going down. But there's no crossover to suggest that the price is reversing and going up. If we look at the 10 period during that same time, it's pretty much the same, except we do get a bullish crossover right here. This was on the pullback, which makes sense, right? This is a shorter term look back, only 10 periods. It did call this reversal, not reversal, this pullback on this candle right here. And then, of course, here was the resumption of the downtrend signal. Well, basically right here, a little bit late, but basically right here, or if not right here. But this was already underway. So you could do a couple things with this. You could just say, well, I'm going to follow the 35, and until the 35 tells me this downtrend is over, if I was in this short, I'm just going to stay in it. If I, whatever reason, didn't get in way back here, which of course would be golden, but if you didn't, well, you can't really use the 35 to get into any parts of the trend, any continuations until really, even on the 10 period, until really, you know, right in here. Um, so you would either have to go to a shorter time frame or use an even shorter length CSI in order to get in at other points in this trend. But the main point of it is that now in this case, the 10 period is pretty much following the 35 period, where it really was not suggesting any change in this trend. I don't know if we can find another one here. I'll just pick something randomly. Um, yeah, maybe something like this. So here's Aussie dollar. And again, both indicators, both look back periods, the 35 and the 10, gave us this buy signal again back in this was late November of last year. And you can see we went all through here on the 35, no change. So this uptrend continued. There was an opportunity right here on the 10 period. So this is where you can use the 10 period to maybe try to find a place within that trend, a safe place to enter. And you can see right here where it's squeezed back together on this little corrective move. And then you got another sell signal on this candle, right? Excuse me, buy signal right here. And that would have turned out to be good. So if you didn't get it back here, and you were looking for the indicator to help you find another entry, well, you had to wait until January, but you did finally get another buy signal. Okay. And then if we move along here, we see we do get a little sell signal on the 35 period right here. Now, uh, I know I just got done saying that the 35 period will generally tend to point to longer term reversals. And that's not what we got here. We did get a sell signal right here, basically on this candle. It went down for about 2 days and then it reversed and went back up. Okay. So um, maybe you took this trade short, maybe you didn't. You could have looked at this and said, well, there was a break of structure here, right? We had this low that led to this high, and then it broke right here. So yeah, this was probably looked like a valid down signal. It only went down for 2 days and then it reversed, went back up again. So, either this would have turned out to be a loss or maybe a small profit on this. And then you got another buy signal, basically a continuation trade on the uptrend right here. And both indicators also gave you that. Okay. So it's not really redundant to have both of them on here because the 35 can point to longer term reversals and also can help keep you in these trades longer because you're not going to get as much noise like you're going to get like with this kind of stuff right here. I mean, ultimately, this noise here on the 10 period was all this chop, and maybe you would have looked at that and said, you know what, if I was long from back here, maybe I do want to get out. I don't like all this noise. But the 35 period really never gave you an exit. And in fact, it gave you another entry, after all that chop and after a little liquidity sweep down and then back up again. But the thing is, the point is that you can use these in conjunction with each other. You can use them in for confirmation where you get the same signal on both of them. I think that's really sweet, right? If you get the same signal on the 35 and the 10 because they're totally different look back periods. So if you get the same signal on both of them, I think that's pretty solid. And then in between, you could use the 10 period to either manage an existing trade or maybe to find another entry along the trend that maybe you wouldn't get on the 35 because it's such a long look back period. Okay. So that's where I'm at with this right now. So it's pretty basic. So all as I do again is I just look through my pairs. My eyes are first going to the 35. I want to look for any obvious recent crossovers or where it comes together, which could indicate either a squeeze together and then a diversion away. Could be a continuation trade. If the previous trend was up, such as this is a buy signal, right? They squeeze together and then it goes up, or a crossover signal like what we had back here that started this uptrend after a long period of consolidation, right? So that's how I'm using this right now. Now I could overlay these two. You could do this. I could say move to existing pane above, and now it overlays the two of them like this. I don't, that's just too busy for me. Although it does make the price chart actually stretch back out to a more normal level. Um, it's too busy, you know. So I do want to keep them separate. And so I'm going to put that back, new pane below. All right. And leave them separated. I mean, I could always scrunch these down if I really wanted to, adjust to be able to still see more price action. I could certainly just go like this. I don't need to have it like way stretched down like this. Something like this is fine. It's just a quick visual. You're only looking at the right edge of the chart anyways on a daily basis. So whatever. Um, so again, use it in conjunction with price action, market structure. I don't just trade just off these signals, but that's the first place I'm looking. And then after that, I will, if it looks like maybe there's a setup, then I'll go down and look at the price and look at the price action, look at the market structure and say, does that make sense? Okay. Because I think there was one, I think it's maybe Kiwi Swiss. Yeah, so this is one where like you can't just trade this blindly. So let's look at Kiwi Swiss. So right now, on both the 35 and the 10, it looks like we have a bearish signal, right? The blue line, which in this case represents the Swiss franc, just on Friday, basically, started diverging upwards away from the New Zealand dollar, which is the orange line on both look back periods, right? You can see the 10 and the 35. However, if we look at the price action, at least for the last 2 days, so this was today and this was yesterday, you can see the price is actually going up. And we are pretty much stuck in a range right now, too. So I didn't take this short because I'm looking at this and saying, yeah, as much as this is a bearish signal, the price action is not really giving me that. And so I wasn't ready to really take this yet. Now you can see I do have an alert set. You can see this dotted line underneath today's candle. I basically am looking for confirmation. Like if this thing continues to divert away and then this price rolls over and we start actually going down, then I might take it. Now you could say, well, you could just be very, aggressive, just take the trade anyways. Put your stop loss somewhere up here, take the short anyways, and maybe this is a good selling into a premium area. And there's a valid argument for that. So you go down to a shorter time frame. You can say, okay, maybe you can sell it right from here. Right? You got the bearish signal on the daily chart. Well, where are we? This is the 4-hour chart. Maybe you could sell it like right, from here where it is now. Put your stop loss either above this high, which would be very low risk. If you wanted to be a little bit more generous, give it a little more breathing room, maybe put it up here. I certainly wouldn't put it any higher because if it goes up and takes that out, it pretty much invalidates the trade anyways, because this is the market structure. So you certainly could do that. And maybe I will, I don't know. So, but this is one where, the price action doesn't at least currently line up with what the indicator is telling you, but this is a rare one. Usually once you get these signals, they will play out on the price chart because it is a good indicator. So I basically took a picture of this chart and I put it in my Discord channel under setups, and this way here I'll be able to monitor it and see like what it ultimately ends up doing. So, but I did want to show you that where you just can't trade this in a vacuum. Okay. And so that's where we're at right now. Here's another one. Current, again, the Kiwi Swish I just showed you, which maybe we don't have confirmation on that. But if we look at the pound Swiss, we have pretty much the same signal. And this one does look like it wants to roll over and go down. I actually did enter a short on this on my funded accounts this morning. So I'm in this now, with a stop loss above the swing. And, we'll see if we can go down here and at least re-challenge these old lows. But the Swiss franc has been pretty strong. The pound was showing some strength recently, but it's kind of weakened again a little bit. So we'll see what happens. It's a little bit of a conflict because I'm also long in the pound US dollar. So if the pound is weakening, and I can tell you that pound USD trade's not doing too good. It's in drawdown right now. I've really debated whether just to close it. When the market reopened on Sunday, I was down a lot on that trade. I was down like $400. It's gone down a lot. I'm back down to like maybe 150 in drawdown because it did go up a little bit. I'm debating whether I should cut it loose because While the US dollar still isn't very strong, the pound also isn't very strong either. So I don't know if it's going to go anywhere. And ultimately, if the pound Swiss rolls over and goes down, that's going to suggest weakness in the pound. And I probably don't want to be in that pound US dollar long. Again, it's just those correlation of the currencies. So we'll see what happens. This is the pound US dollar, and you can see, you know, it tried to go up yesterday and now it's back down again today. So I'm back into drawdown. If we look at the indicator, we have them both sloping down. We did have this buy signal that hit last week, actually more than a week ago, week and a half ago, on the pound US dollar right here. But this is an old signal now. You can't go by that now. But you can see they're both kind of like heading down right now. So, but the market structure on this still to me looks fairly bullish. So, anyways, I moved my stop loss. It was further down here. I moved it up to just underneath today's candle. If it rolls over and keeps going down, then I'll be out of it. But I'm not ready to cut it loose yet, just because I still think the market structure is there, but we'll have to see what happens. So, yeah, so that's that. So I just wanted to talk about the CSI indicator and just talk about, again, just another way you can use it, kind of a long term and a short term look. And again, on the 35 period, you're not going to get as many signals, although the major signals actually will line up on both of these. It's just that once a trend kind of is going, the 10 period will be a little bit more noisy. It's going to show you more of the pullbacks. It might even give you a crossover in the other direction. But the 35 kind of will smooth it out and just show you like, hey, here are the major turning points. And depending what your time horizon is, you can sit, and how often you want to trade, you can sit and wait for the 35 to give you these either re-entry points or crossover signals. Like here's a re-entry point for, a short, right? Market starts going down, right? Crossover. And we have this little squeeze together right here. This is a re-entry point up, where the that continues this downtrend. And here's a bullish crossover right here. And again, the 10 period lines up with that, but you can, just use the 35 and just, operate off the longer one. You may get a little bit later entries because you're operating off of a longer look back period, but it also smooths things out. So, but I like to look at both of them. But I understand why there's a difference in the two of them, because this is just a shorter one, so it's going to be more noisy. Where this one's going to smooth things out, may give you slighter late entries, slighter later entries. That sounds weird. Um, but and it's going to give you less signals, but it will take a lot of the noise out too, and potentially reduce, false signals or something that just turns out to be a quick, corrective move that's not actually a sustainable trade. Although again, on a daily chart, uh, what was that one I was showing before? Is that Euro Aussie? Yeah, Euro Aussie. Like, the 10 period showed us this bullish crossover right here, that probably either on this candle or this candle. Well, it did go up for another 4 days or so. So I mean, it is a valid trade. It's just that, it wasn't sustained very long. I mean, realistically, it was probably on this candle right here. And it did go up about 273 pips in in basically just under 2 weeks of trading. So I mean, you could have traded this and just understood that the long-term trend was still down according to the 35 period. This is a textbook one right here, where you get the corrective crossover here. You didn't get it here, but then you get the re-entry on both of them, uh, basically somewhere in this area right here. All right. So that's how you can kind of use them synergistically, um, and play both sides of the market, just understanding what the larger trend actually is. So, all right. So I did want to point that out on Forex. I'm not going to go through all the pairs. I do have on my watch list, about, half a dozen, maybe about 8 pairs. I'm in some of these trades already. Pound Canadian, I think I'm in. Euro Swiss is on a watch list. Euro CAD, Dollar CAD, Pound Kiwi, I'm in. Euro Kiwi, New Zealand US dollar, Pound Swiss. I told you we talked about. I'm in that one. Dollar Swiss. I'm still in that one short, and New Zealand Swiss is on a watch list. So that's where I'm at right now, based on the indicator. And that's how I filter it out. I basically every day. Oh, and the other thing is I don't have the live feed turned on anymore. You can see it's turned off on both of these, the 10 and the 35. uh, I know I talked about having it on to give more real-time signals. But I did find, in just kind of looking at my trading history the last couple of weeks, since I went with that, I did find I was probably over trading because I was being more reactive to what the indicator was telling me intraday. And I'm like, I just kind of went back to how I found success with this indicator, which is just being patient, let the market play out for the day, let the indicator update at the end of the day, and then make a decision. If you're trading on a daily chart, one day is not going to really make any difference. Wait for some confirmation and then decide after that, if it's worth getting in or not. All right. So, and again, not using the live feed anymore at this point. So, all right. So now flipping over to currencies and currency futures and grains. Um, I'm really kind of trying to debate here about paring down what I'm trading here. It's a lot of mental energy. There's a lot of, you can go on YouTube and search and listen to a lot of different opinions about whether you should just trade one market or 20 markets or 5 markets or 10 markets. Um, and I don't know. I can see an argument for both. Um, I think if you're newer to trading, you should limit your what you're trading. I don't know if one market's enough. But I certainly wouldn't do more than 2 or 3, because, you gotta get used to how markets move and just get used to trading in general. But for me, obviously I've been trading a long time, but for Forex, I'm only looking at the daily chart anyway, so I really only need to look at it really as little as once per day when the indicator updates, and manage my existing trades. That's it. So if I'm in existing trades, I may manage those more than once a day, or at least look at them. But in terms of new opportunities, at most you're going to get once a day, because especially not having the live feed on, right? But in futures, I'm trading on shorter time frames, and I've debated this. Um, I'm kind of squeezing down to lower time frames a little bit, and just looking for more like just day trading opportunities. So maybe with Forex, I'd be more like swing trading and being able to hold trades multiple days. Whereas with futures, I may look, especially since I'm running it mostly on funded accounts, and some of them have rules against holding trades overnight, based on your margin and just the rules of the prop firm, where they might not allow you to carry trades overnight. So is it really worth holding on to swing trades, if they're not going to let you do it anyways? Um, so, looking at more short-term trades. So I don't know. I've kind of debated, because if I'm looking at a shorter time frame, let's say a 4 hour or even a 1 hour chart, that's just more mental energy I have to spend. But again, with Forex only really being a once, theoretically only a once a day need, then I can spend a little bit more time during the session looking at, day trades potentially on these markets. And so with that in mind, um, if we go to, like, let's look at some currency future. Actually, we'll just. I did add live cattle. This is LE. This is live cattle. And again, we're not looking at the CSI at all for any of these now. At least not for grains, or really for any of these. So you can just ignore the CSI now. And we're just looking at trends. So this is the 1 hour chart of cattle. And you can see right now we're in a little bit of a downtrend, right? We just put in this swing high right here, and the market has gone down. We can use the stochastic RSI, which is the only thing I really use this for, are these day trades. And you can see that did give a nice sell signal here. So there's no trade here now. The market's already moved away from this zone. So actually, I'm going to get rid of this alert. I had an alert there in case this was just a pullback. We're going to go back up since we were trending up, but clearly that didn't happen. So we're down. So basically, what am I looking for now? A pullback. If this little downtrend is going to continue, as long as we're making structured to the downside, which right now we've got a swing, a lower high right here. Um, and we're at kind of equal lows right now, but it is still going down. So assuming we put in a new low today, then we'll wait for a pullback. Hopefully, let the indicator also pull back up into the oversold, overbought area, and then look for another entry down. Okay. So, at some point, something like this, right? Market pull back to some degree, and then, back down and make a new low. Indicator comes out of the overbought area and starts to go down again. Okay. So theoretically, that's what you're looking for here, just from a pure market flow standpoint on cattle. And again, this is the hourly chart. So this would definitely be like a day trade type thing. All right. If we go to other markets, soybean oil is in an uptrend, but there was no entry today just based on that. Um, Soybean meal, you can see I'm in a short. It's basically sitting at about break even. We do have market structure sitting here, right? You can kind of also see the market structure with the indicator. Um, this is really struggling right now. I'm in 2 contracts short. It's just sitting at break even. I don't know if it's going to go anywhere. But I'm going to hold it for now. I do have a stop loss sitting right above there. Um, Soybeans, really nothing. There was no entry this morning. There was an entry. Actually, there was an entry earlier, but at 8 o'clock, I did not take this because I was looking at Forex at the time, so I missed that. So that's fine. Corn, not really. Corn's really choppy and ugly right now. So um, you can see there really wasn't an entry, anyways, and we're also sitting at this old high. So either way, there was no entry here today. So if this little uptrend is going to continue again, we need to see a deeper pullback. And then wheat is also choppy sideways. I have no interest in trading this right now. It's just there's no trend. It's very ugly. So if we start, trending down or trending up again, fine. But right now, we're basically inside of a what looks to be a pretty defined range right here. So I'm not trading that. And then in currencies, currency futures, another one that's just dead in the water. So I took this long in I took this long in this is the Canadian dollar futures because the CAD did look like it was picking up some strength in Forex pairs. So I figured this would be a good trade. Looked like we did have a little pullback. Uh, And there actually was an entry here but this is during the pre-New York session. This was like 6 a.m. this morning, so it was like mid-London session. There was a buy signal right here. I didn't take that entry, but I figured this was still good in general, although it is kind of back near the highs. And this was a pretty shallow pullback. But, anyways, again, just have my stop loss sitting right underneath here. So those are the only 2 futures trades I'm in right now. There really isn't anything else that I could see just based on this. But, this is a nice little uptrend on the hourly chart, and, higher highs, higher lows. You can use the stochastic RSI and just take real technical based trades on this, and they would have played out. And so, basically, as long as we keep holding on to market structure, right now you can make an argument about either this being the swing level or this one, just depending on what this current trade ends up doing. If this goes up, runs a new high, then this will become our new market structure. But right now, this is because we haven't really pushed higher and broken any new highs. So as long as that's in place, then we keep looking for longs. So that's it. So I have to just think about that. But just from a standpoint of just taking trades, you know, I'm looking at the currency and the grain futures just being more like day trading type opportunities, and just basically looking at like an hourly chart, use the indicator. If it looks like there's a setup, fine, I'll take it. If not, if I don't take any futures trades during a day, then that's perfectly fine too. These are all being tagged to my futures funded account. And I did change to a new futures funded account, different company, which it doesn't matter. I don't have affiliate links, so it really doesn't matter. I don't even really need to say which one. Um, but I switched mainly because they had a little bit easier rules in terms of the consistency rule. Um, they have it during the challenge phase, but not during the funded phase, which I prefer because I don't want to have to worry about a consistency score when I want to take a payout. But I don't mind it during the challenge phase because if they're going to have one, if it's going to be one or the other, I'd rather just do it, slow and steady during the challenge phase. But when I get into the funded phase, I can be a little bit more aggressive. I don't want to have to like not be able to get a payout because I didn't meet some consistency score. That's just BS. Um, so that's why I switch. And also because they don't charge a monthly fee, they only charge a one-time challenge fee. With the other one I was using, they were charging me every month while you're in challenge phase. And I tend to take a long time to finish these challenges. I don't want to keep paying. So anyways, that's why I switched. That's the only reason why I switched. I didn't have any other problem with the other company. It just has to do with their rules and their fees. Um, so, but other than that, I didn't have any, operational issue with it. They both allow me to use TradingView and they both use TradeOvate. So I can connect the account to my TradingView so I can trade off of here and not have to trade on another platform. So this has moved into a tiny bit of profit, but it's two contracts, so that's essentially near break even as far as I'm concerned. So we'll see if this runs up. If we get a little push up today, that would be nice. All right. So yeah, that's about it, guys. Just wanted to kind of give you an update on what I'm doing with the CSI indicator. And again, if you have any interest in this indicator, let me know in the comments. Again, I don't sell it. I'm not involved with that. I didn't develop it. But if you have any interest in learning more about this or getting a copy of it, again, just let me know. I'll somehow put you in touch with the developer, and you can work with him and figure out, how to get a copy of it and how much it's going to cost and all that. So, all right, I'm not involved with that. So, um, because I don't sell anything on this channel, as I've stated, and I don't plan on getting into that. So, all right. So that's it, guys. I'm going to leave it there. Any questions, comments, leave them down below. Just wanted to provide a quick update and see where we're at. Let's let you know about a couple of trades I'm in and just, again, some updates of how I'm using the CSI. And again, even though I keep experimenting with different lookbacks and setups, the bottom line is I'm using that indicator pretty much exclusively and on a daily basis to help find trades. All this stuff about look back periods and how many instances of it on the chart, it's all just personal preference. The bottom line is it's a really good indicator. It has put me on the winning side of more trades than certainly any other indicator I've used. But again, I don't use it alone, use it in conjunction with market structure and price action, as I demonstrated on those couple of charts when we looked at those. And it's nice, and it's a nice filter. And if nothing else, it's a good filter. And it's a way to very quickly evaluate where markets are at without having to like just stare at the price chart and try to figure it out. You take a quick look at the indicator and see if it's telling you there's perhaps a low risk entry developing, or whether you've kind of already missed the boat. And then at that point, you could also use the shorter look back period to find, another entry along the way if you missed the longer term entry that the indicator gave you. Okay. All right. So, yeah, so that's it, guys. I'm going to leave it there. I hope you have a great rest of the day. Uh, maybe I'll drop an update later on. If not, I'll be back tomorrow. Questions, comments, leave them down below. Make sure you smash that like button, subscribe to the channel, and look forward to talking to you again. All right. Take care.